Welcome to the daily brief, where we'll go over the action in the market for Wednesday, September 14th, and then see how things look for Thursday, September 15th. And this will be the only video that is posted today. I had some hardware issues, and that took up a lot of my time. Plus, the market really didn't move all that much. So if you want to get a better look at what's happening with the charts, go back and watch the full-length video of the daily video update for Wednesday, September 14th. We saw a little bit of a bounce, so there was some small improvement in some of our charts, but as the indicators catch up to register that over 4% decline, some of them are actually turning more negative. And I have a couple of charts to show you, since this is the only video that I'll be posting for Thursday. So let's go back and talk about what happened. Right at the open, we had a slightly higher open, but we were below the daily pivot, and we stayed below the daily pivot for the whole day. That's really what I was watching for. If we were going to see some kind of a bounce at 39.64 and actually go back above that, we had to reclaim that daily pivot level. Well, we didn't get above that. So as long as we stayed below that, the price action was pretty subdued. You have a lot of folks that are still in a lot of shock from the massive decline that we saw in Tuesday's session. And then prices stayed below that daily pivot for the entire session. As the day went on, prices ended up drifting sideways and then went negative before closing positive. We saw a little bit of a buy program come in about the last 20 minutes, and that helped to improve prices and actually go positive. Where some of the other indexes, I mean, the Dow was up a little bit, small caps, mid caps, I believe, were down slightly. So it was just a pretty slow day as far as price action. However, we ended up being up 0.34%. Volume is back to being above average, so it's been picking up, especially since Labor Day. The technicals are negative. We have to go with that. Everything is pretty much shifted over negative. There are some positive things that we can look at, not very many, and you have to dig pretty deep right now, but everything has pretty much shifted over to the negative side because of inflation and interest rates. That's really what the markets are fixated on right now. So what are some comments that we can make? Just saw a very modest rebound after the strong down day that we saw on Tuesday. Not many changes in the charts. The couple that I think might be worth talking about, I actually have to show you here. And the S&P is back down at the trend line, and that's one of the charts that I'll show you. Or actually, it's back up to the trend line. I should rephrase that. The one interesting thing, too, is discretionary continues to sneak higher, specifically on a relative basis, where we're seeing the Qs and the mid caps, small caps, they're all declining, but the discretionary is the one area of our sector rotation that continues to go a little bit higher. That could be positive for the markets. And then oil is right around the $88 mark. What's been happening is instead of using the oil reserves that they're supposed to be used for an emergency, where if we have a military conflict, our military will have the fuel that they need to do things. Well, it's also now taken on a political tone, and that's one of the reasons why gas prices have been coming down. They've been taking money out of the oil reserves and flooding it into the U.S. market, as well as some foreign markets, which is kind of interesting. And that's been bringing gas prices down. Well, they're going to have to replace that at some point, and it's been stated, or they're developing this scenario, that the government is going to end up replacing that at around the $88 per barrel mark. So that's why oil prices are right around that level. So they may stay at about that level for a while. We'll have to see. This scenario may change. It may not even be true. It may be modified, whatever. The 10 to the 2-year, the 10 to the 5-year, those yield curves are still inverted. Sentiment is still tipping a little bit over towards the fear side. As far as the economic reports, we had the weekly report of mortgage applications. It declined 1.2%. Not a real surprise there, as housing prices continue to go up and interest rates go up, and it's pricing a lot of folks out of being able to buy a house right now, or even refinance. The big report that came out was the PPI, and it came out as expected, with the headline number being down 0.1%. The core was actually up more than expected at 0.4%, where they expected it to be up 0.3%, but the market didn't really freak out over that. The report came out, the futures didn't really shift around. I wasn't watching bonds all that closely at that time, but there wasn't a really big reaction to this. It's the consumer level that's really getting the most impact right now. Our trend, it's back to negative with the red line below, and we're below 20. Now, this may not last for very long. We'll have to see. The market's just been shooting around all over, and if we continue to go lower, the ADX will probably turn up. But for right now, we're below 20, so we are in a trendless environment. Our bias, I'm still keeping that as negative, because to see a third of a percent bounce after over 4% decline the day before, yeah, that's not real positive there. And there wasn't a lot of enthusiasm to come in and really try to buy things. And I've switched our momentum kind of to mixed, but with a real heavy slant over on the negative side. Things have really switched over negative. We're going to have to see some real buying coming in to switch that back. Here's one of the charts where we broke down below this trend line. Well, we've been able to come right back up to the trend line currently. This is the support that the rise was coming out of. We had the trend line starting here, and then we built a bit of a base here, and we're starting to go higher. Boom, here comes Tuesday, and we've fallen back down below that trend line. Well, we're right about on that trend line currently. So you can see that as positive until we fall below that. Then it will become actually more negative at that point. See at the bottom where volume was above average. Another thing that's negative is the SIR. It finally switched over and there's a dot on the top. So that's a negative signal now. And so I wanted to point that out. Another thing, that this is a newer chart that I just started using in the videos. This is a ratio between the S&P and utilities. Utilities have been doing really well. And so when this is going down, that means that the S&P is underperforming utilities. And a lot of times that matches up with either tops or bottoms in the S&P 500. Well, we continue to really decline. So that is not necessarily positive for the S&P 500 right now. We want to see this turn around and go back up where the S&P is outperforming utilities. It's just not doing that yet. All right, so what's our outlook then? We have switched to negative right now, pretty much across the board. We have retail sales. That's a huge part of the U.S. economy. So that'll be coming out on Thursday. We have jobless claims that come out every week, import, export prices, and the Empire State Manufacturing, as well as the Philadelphia Fed survey. Not huge reports, not really much of an impact, but still pretty important. Retail sales is the biggie. And then we have industrial production as well as capacity utilization coming out. That just shows how efficient or inefficient our companies are these days. And then business inventories coming out. We've got the whole list of geopolitical events that, again, it's inflation and interest rates right now for the stock market, but any one of these other things could always shoot to the top and be the fixation point. So our scenarios, we have to go with the down scenario to a degree because of all the headwinds that we're facing right now. The technicals are negative. We can't go with the positive because the technicals are negative. Our scenarios, our rotation, our setups, those are back to being on hold now, even though they had been showing some improvement. Tuesday's decline pretty much wiped that out. The technicals are negative. We've lost a lot of the moving averages and pivot points. We're starting to break through some fib retracements. So it's just not looking very good right now. You could go with the sideways scenario because the ADX is below 20 and it's switched back to being negative. Now, if we really start to move down, those lines are going to get far apart from each other and the ADX could actually turn back up. So what's our conclusion? S&P is negative, short-term negative, intermediate-term negative, and long-term negative. So thank you. I hope you found at least this short video helpful, and I'll try to prepare the next full-length video when I see it warranted. Just as kind of a side note for those of you that are still listening to this, if I ever don't post the video it might be because I'm having hardware issues or internet problems or something like that. My goal is to at least put a brief video up every day, and ideally to do a full-length video and a brief video. If it doesn't happen, it just means I'm not able to do that. If I ever am at the point where I'm not going to post anything, I'll try to let you know that well ahead of time. So have a great day, and I'll talk to you tomorrow.